Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for what I hope has been a wonderful Wednesday for many of you, to another YouTube video. This is going to be our daily cryptocurrency market update video. And we're going to be covering a variety of things in this one. We're going to be looking at Bitcoin technically. We're going to be talking about Bitcoin miners and the capitulation that they may face with increasing energy bills. This was inspired by a tweet. So we'll show you that. We're also going to talk about the macro. Yesterday, we actually tried to give the bullish case for Bitcoin, as this potentially could form some sort of a double bottom. However, you guys know that that's not my preference in regards to what way I think this market's going. We are bearish. We have been bearish really since April. Fully bearish, but before that we were kind of going into the start of this year saying, look, you really need to be careful. This is a tweet from the start of April. We were looking at the long-term regression bands when we were saying, look, Bitcoin's at around about 44k. It's likely that you're going to see that further downside, and then we spilled all the way down to sort of 17k. Gradually, it wasn't just one big spill. So we've been very bearish for a long time, and yesterday we weren't coming out and saying that we're bullish. We were saying, we'll give you a bullish scenario, what Bitcoin needs to do for us to kind of have some sort of a bullish inkling on the sort of longer term horizon. Whereas the reality is, I'm ultimately believing or thinking that Bitcoin not only takes out 17k but goes significantly lower. I think the environment that we are moving into is an exceptionally punishing one for risk on asset classes, and the reason being is because not only from an institutional level are you not going to have them buying into the crypto space, but from a retail level, people simply are not going to have any extra income to put into the stock market, to the cryptocurrency market. When people have to choose between their electricity bills and buying Bitcoin or Cardano or Ethereum, it's pretty obvious what they're going to do, or at least should do. So we'll talk about that. We'll look at the macro. We'll talk about and bring up a tweet from Macro Alf. Give this guy a follow. He's absolutely amazing at what he does. Probably one of the best. And we're also going to talk about USDT dominance. Huge correlation here. So and one thing I hope I've impressed on you guys is that we're playing a 3D chess game here. You know, there's moving parts to markets, and certainly the crypto market. You can't just look at the Bitcoin chart and expect to get a sense of direction. Yes, it will give you some technical patterns, but when you look at markets as a whole, when you look at USDT dominance, when you look at the US dollar, the DXY, when you look at the stock market, you get more of a kind of overall an overarching picture. So we'll cover kind of what Bitcoin's doing. Definitely a lot of short squeezes going on. I don't know why people are FOMOing into shorts at 20k. You know, we said this level has to be somewhat respected, and you can see it is being defended. Yesterday we saw a real harsh sell-off. We're now back above it. You know, what comes potentially, you know, we did say yesterday that we could see a bit more upside before we get that continuation to the downside, because the problem is when everyone's bearish, you know, there's no one to take money from other than the bears. So what happens is the market will essentially go against them, and it really frustrates me for somebody who was shorting up here. You know, and I've actually, if you guys are in my Patreon membership, you'll know that we got short on a number of altcoins here. It's frustrating when your shorts kind of get, you know, people FOMO into shorts here, because ultimately it provides a kind of support for people to for the market, because you get this real short squeeze. And I think that's what's happened this morning. I think overnight markets love, certainly for myself, I know America is sort of awake when I'm asleep, in other parts of the world like Australia, but you know, it typically happens overnight. You'll get these kind of short squeezes. There's lots of shenanigans, lots of bots, lots of algorithms. This is the hard part about trading. You've got to be the top 5%, and you're competing against, you know, some really smart individuals. You're competing against bots, algorithms, so on and so forth. And we will dive into this a little bit more, because really, largely all I think is happening is you're going to do something like this. You're just broadening this wedge even more, and you're going to spill to the downside. You're probably going to grind up here. Maybe you get a retest of 21k, 2150. Maybe. You know, we've seen a lot of people position. We know September is typically the worst month of the year for the stock market, traditionally. Also echoed forth into the crypto market. You know, there is seasonality to markets. But really, a lot of people would have already positioned going into September. So maybe you have a bit of a pump in September. You got the merge coming up, so on and so forth. But towards the back end of it, you're really going to fall. You know, there's no doubt in my mind Bitcoin's coming in and revisiting 17K. I want to make that clear. Now, that isn't financial advice, but what I'm saying to people is, just like we were saying at 44K all the way down to 17, this is not the time to be holding and buying crypto. You want to wait until there's reason to do so. And right now, it's very simple. The risk far, far outweighs the reward. We'll talk about USDT dominance. What we'll do actually is take a look at how the other markets around the world have opened. The Asian market, the Nifty 50 is up, the Hang Seng is down. There's lots going on in China and that sort of province. The dollar, this is still very much a dollar story, and we've said, and I should really get rid of these draws now because we've had them on for a while, the dollar is going higher than it currently is. We had 108 as a target back months and months ago, even when people were calling for tops all the way up to 108, and were wrong, because they didn't inherently understand what interest rates do to the dollar. If the world reserve currency is upping its interest rates, well, everyone needs to find more dollars to pay that debt off. It's that simple. It's basic supply and demand. You need more dollars. The supply actually is restricting. Let's pull that up. Okay, it doesn't want to give us on that. Let's pull it up on a Bitcoin chart again for you. We pulled this chart up for months now because it's the driver. You know, when you look at markets just moved on money. It sounds kind of self-explanatory, but you can see the supply went up here, and now we've got a restricting supply when everyone needs dollars. So it's natural the dollar's going to get a bid. Dollar bid, Bitcoin against the USD. You know, it's kind of self-explanatory, but this is just, you're going to keep on keeping on in this downtrend until there's reason to not. That's the main message, and we can see US dominance, USDT dominance, and the correlation between Bitcoin. USDT dominance going up, Bitcoin going down. Then you have USDT dominant. These are all things you guys need to look at as crypto investors. Go on TradingView, type these things in. You can do it for yourself. This channel is all about learning, educating, and helping you guys grow and sort of persevere on your crypto journey. You can see that we then caught a bid on this down, and then the USD dominance asserts. We go down, have a bit of an off day. So watch this. Very good chance when USDT dominance goes up, Bitcoin's going to go down. That might give you some sort of an edge in some sort of a way. You know, on top of looking at everything else, you're going to have an edge over the other 100% of people that are trying to participate in markets and take your money. This is what trading's about from an investment point of view. And let me actually touch on this topic in regards to DCAing. DCAing works if you can afford to hold for long enough. Some of the best advice I've actually heard from, it's not the best, but the most simple advice that's actually works is it's almost like a guaranteed way to make money in the stock market is to just buy and hold over a long enough time. Historically, you'd have made money. Now, that may continue. If history is anything to go by, it probably will be. So DCAing does work for Bitcoin, but for me, I'm more interested in keeping my precious capital, keeping it safe, farming it in whatever ways I can, in a safe manner, and then reallocating once I think I've seen enough pain. I have not seen enough pain yet to warrant getting back into these markets. And I don't say that with any kind of a light tone. There is pain coming, and we've been saying this for nearly 7-8 months. You know, we weren't the first out. Before 44K, we were saying, look, there's issues, look at the yield curve, look at all these things. We've spoke about this for months and months on end. And it's only now that people are talking about the macro. And we've had far, far smarter people than myself come on and talk about this. So the Fed is roughly 50 billion behind its schedule on shrinking the MBS holdings via QT. That's not a small number. From here, maturities are likely to accelerate due to slow prepayments. Nobody wants to refinance mortgages at a higher rate. Outright sales coming in Q4. And the housing market is going to get smashed. For somebody that owns a number of properties, it's interesting. I haven't moved to sell any. The reason being for me is because I get good yield off the properties that I have. So there's not really any, I don't think, reason. I think the property market recovers. I think it's going to continue to go higher over the long term. But I do think there is going to be some sort of capitulation, certainly in your, high-flying areas like London, like, many of these kind of areas where the property market has just been super, super hot over the past 2 years. The realization that, hang on, we can't afford the mortgage. We can't, we don't want to refinance because we're going to be paying at a high rate. We're just going to sell. I think he's gonna kick in. And talking about rates, and this is talking about America largely, but talking about rates, we know that the Bank of England is going to start upping rates. They've predicted a multi-year recession as a result of this. Boris Johnson's a likely successor wants to review the Bank of England's mandate, and some are worried. So Liz Truss has indicated that she could consider curbing the central bank's independence decision-making on interest rates. Welcome to socialism. Welcome to communism. This is what we're moving, and this is under the guise of the Conservative Party. We are in the mess that we are in, and it gets worse as a result of us being too dependent on our governments. And every time these events happen, these financial events, which some may say are manufactured, I'm not going to say that. I'm going to try and stay political. The chips get stacked against the masses and in favour of, the kind of controlling party. You don't want... The Bank of England is controlled anyway, but you don't want the government having control over complete control over finance. That's how you end up in a kind of Federal Reserve situation. I just don't think this is a good look. But yeah, no, there's lots and lots of things coming. We've got Warren Buffett cutting his BYD, which is I think a Chinese EV manufacturer. When Warren Buffett, the ultimate hodler, is cutting stock, that kind of maybe gives you a bit of a warning sign. And the fact that he's doing in China, there's lots of issues with China internally. We're seeing their property market it's basically a ghost market, to be honest, just collapse. And I think that's going to be contagious. We saw with the Evergrande news, and the Evergrande news isn't over by any stretch of the imagination, by the way, guys. People have just forgot about it. We all suffer from recency syndrome, including myself. China's a real issue. And the thing is, it's not just that, it's who's investing in China. With the Evergrande stuff, we saw that BlackRock had invested in it. There's contagion there, and that's just one, catalyst of many that's out there at the moment. And this is what people aren't pricing in. When we saw the rally that we saw, people going, oh, well, the Fed ain't going to do another 75% basis rate hike, peak hawkishness is over, blah, blah, blah. Okay, maybe if that is the case, and that may be the case, maybe they don't do another 75 basis point. They're still going to do interest rate hikes, and we're already at the neutral level, moving into being very regressive. You're not looking at the catalyst. You're not looking at the risk that there is right now to some sort of I think, and I could be totally wrong, we end up with another March 2020 event. I think right now we're looking for somebody to blame. We're looking for a reason for the Fed to pivot, and I think that comes in the form of pain. I don't mean to be, and we gave you the bullish scenario. Look, maybe you get a double bottom here. There's a lot for Bitcoin to do. It's got to come at least back up to here, and we said it's got to do it with strength. Yesterday didn't really show us much strength. The fact that it's kind of recouped a lot of these gains. You had this yesterday. This doesn't look too bad. You maybe hold this, you can come up, and then you get your push up to here, and then you see that further downward continuation. But I ultimately think, and let's give me a little bit more space here, that you're probably just going to do something like this. It's going to be unimpressive. You're going to do that, and then you're going to come down. Maybe you form a sort of larger head and shoulders here. This is kind of what we're looking at, and we do see that downward continuation. And actually, I'm not calling this as a head and shoulders because it's got a form yet. Maybe you do get something like this take place. Okay, drawn all over the place. This is super rough, by the way, guys. I think Bitcoin's coming down to 15k, personally. That's why we're not investing right now. Maybe we're wrong. Maybe this is the bottom, like all you YouTubers have been calling. I just don't think that that's the case. This was interesting, actually. This was a tweet from Operation Crypto. My dad owns a small Bitcoin mine in Leicester, which is in the UK. His electricity bill has just ramped from 550k a year to 5.5 million a year. He is still working out his options, but more than likely he will be forced to close. How many other people do you think are in this? And the UK, we're getting hit particularly hard. Remember, energy bills in October are going up 80%. That hasn't happened yet, and you're bullish on a market that's driven by money, driven by liquidity, when no one's got the liquidity. It's very simple. Yet people are still missing it there. And it's a hope thing. And I've been in that boat. In 2018, I was hoping and praying that what was happening wasn't. And it continued to go down. That was one of the best lessons I could ever have learned. Because it made me go, okay, well, all my friends have left the crypto space because nobody wants to invest in it anymore. And I think we're still waiting for that. I think we have too many people involved in crypto for it to turn. And this is the thing, when people think that enough, like, just looking at, so this is one thing I get all the time, how much further can Bitcoin actually go down realistically? Okay, so Bitcoin at one point was down 74%. Today, it's down 70%, right? So people are going, oh, nah, there's no way, mate, that it's going to go down. You know, how can it go down? There's only, 30% more it can go down. It's impossible. Maybe it goes down an extra 10%. Okay, let's do that then, because this is what people don't realise. It's the most stupid argument ever. So let's take it from today. Where are we? I need to change that. Let's just take it from here. 70% down, right? To go down to 15k is another 24%. To go down to 10k is another 50%. So there's not just 30% you can go down. There's a lot more you can go down. Now, I'm not saying we're going to go to 10k. I think 15k, let's see what we do. But potentially, there's a room for more downside there. It depends how bad things get. What you got to remember is, yes, Bitcoin is revolutionary. What happens when miners start capitulate? And we've been saying this. This is not something new. We've been saying this since 44k, and we're still reiterating this. It just depends how bad things get. But in my humble opinion, now is not the time to be buying crypto. We've been saying that throughout the entirety of this rally. We've been saying it was going to fall, and that this rally, you don't want an explainable rally. You want a rally that goes, what? Hang on. Why are all these big players buying all of a sudden? Why are we seeing these huge amounts of volume? And people go, oh, well, there was huge amounts of volume on Binance. Binance have free transactions or free Bitcoin spot trades. You don't think that's affected things? So that's really all I've got for you in this video, guys. A bit more of a long-winded one. Just really important for me to reiterate a lot of my stances on things. Again, this was back in April when we were already talking about, getting out and our macro view on things. Doesn't look too good, and we were looking at the long-term regression bands. All I've got for you in this video, guys. If you enjoyed the content, like us, would appreciate it as a comment. I look forward to seeing each and every one of you in the next YouTube video. Have a wonderful Wednesday. Catch you in the next one.